Good morning, ladies and gentlemen, and welcome to the show. Glad to have you guys here on this Monday, the 10th of January 2022. Listen, got a lot going on. I called this market right now. I've called this for about 2 or 3 years now. I called it a deflationary spike event that's coming, and we're in it right now. Now, the markets have turned down quite steeply, but uh, they're going to continue to turn down, but it's not going to be a continuous ride down each day. Like I expect they're going to drop, and then they'll bounce just a little bit back, but not up to where they were, and then they'll drop again. It's going to be bearish action, in other words. We've entered into bearish action on this deflationary spike event, and it's going to continue until the Fed turns it off, until the Fed's had enough, and until it breaks the back of the Fed. The markets are going to break the back of the Fed. Right now, they're talking about all of this bearish. They're not dovish right now. They're very tight with the money right now, the Fed. And, well, inflation scared them. And that's what this is all really about, is because they can't control inflation. And they know it because they can't. The biggest mechanism to control inflation right now is raising interest rates, and they really can't raise interest rates more than just a few basis points. You know, they're already approaching the limit of where they can let these interest rates go because the interest rates have been rising, pricing in the Fed's actions. So, they got no wiggle room now at this point. So when markets start to turn down big, first they fear inflation. They're going to fight it. They get out there and they do all these policies and they make markets turn down. But soon they're going to be fearing deflation. And this narrow margin between deflation and inflation is caused by pressure within the system. And the pressure comes from over leverage. See, all of what you call money out there is all basically credit. And the other side of that credit is debt. And every time they grow the credit larger, they grow the debt larger. That creates pressure within the system. Right now, at this point, it's tremendous pressure. It wants to either deflate. Well, actually, what it wants to do is deflate, but the inflation comes from them reacting. They cannot allow all of these bubbles now to burst. The damage it would do now at this point, it would destroy the system. They've gotten so large, these financial bubbles. It's called the everything bubble. It's gotten so large now at this point, they cannot let it deflate, completely deflate, and purge the system out of all malinvestment, because there wouldn't be any money left. Period. The end. They have to keep it inflating. They have to keep these bubbles propped up. And so right now, what's happening is their actions, the central bank's actions, are starting to burst the everything bubble. And it's creating what I've called for years a deflationary spike event. We're in it right now. Do not bet against these markets, guys. This is too dangerous to bet against the markets right now. And the reason why is because the Fed can turn on a dime. We do not know at this point when the Fed's going to change their policy again and go back to an easy money policy. And if you're betting against these markets, say you're putting in put options or whatever, you could get slaughtered when the Fed turns on their heel. They're going to turn on their heel at some point. And I might be wrong. Like I've been saying, hey, they're going to wait until it's 20 or 30% before they turn on their heel. They might only let it drop 5 or 10%. And they could just turn on their heel overnight. Pow. Just like that. But I'm going to tell you guys what. When they turn on their heel this time and they go back dovish again and they start to support these markets, the whole world's going to see and say, hey, you know, this is going to go on forever. The whole world's going to say, it's going to be the last straw. The whole world's going to say, well, they can't fight inflation now. It's game over. It's inflation for the next forever. They're just going to keep adding zeros onto the currency, you know, and the currency is going to become valueless. And that's when gold and silver is really going to take off, including cryptocurrencies. Now, there's two assets here, and they're going to do the best of all. It's silver, and it could do a 10x, 10 times. And Bitcoin. Bitcoin could do it 10 times. Those are the two assets. And there's going to be certain, let's call them altcoins, alternative coins to Bitcoin, that are going to do really well too. But just certain ones. You say, well, Glenn, what about gold? What's gold going to do? Gold's going to do good. Gold could do like, I don't know, 2 times, 3 times during this period in time too. Maybe 4 times. But it's the ones that are really going to take off and really going to give you your big payout is, I think it's going to be silver and Bitcoin. And so if you've got a lot of silver and you've got a lot of Bitcoin, I think you're going to be a very happy camper in not that long a period of time too. Now what we're waiting for, what we're watching for is the Fed to turn on their heel and make a 180-degree turn in the opposite direction. The pressure's coming on the Fed right now. Every time we see this market drop now, over the next coming weeks or however long this takes for this deflationary event to play itself out, how low are they going to let it go? This is the question. This is a game of chicken. You got 2 drivers heading at one another. Are they going to wait? How close are they going to wait until that crash before one of them veers off to the right? Okay, and that's what the Fed's doing right now. How long are they going to be able to hold the line? How much guts do they have? Let's just put it that way. How much guts do they have to hold the line on this while they watch their precious markets all falling like a stone? Because that's what's going to happen over the upcoming weeks. Yeah, sure, we're going to get bounces. The market might go down 500 points and it might bounce back 300. And then a week later, or a few days later, it might go down another 600 points and bounce back 200. We get these bounces. But overall, this market's turned bearish now. And I'm ahead of telling you it's turned bearish, and it's all got to do with the actions of the central banks. And when is those actions going to change, and when are they going to turn around and go the opposite direction? So that's why you don't want to bet on this market. I mean, bet against this market. You don't want to bet against this market. Because when this thing turns, it's going to turn really quick, overnight. You're going to wake up one morning, and all of a sudden the Fed's going to be dovish again. But that's it. That's the big moonshot for all of these other asset classes that are out of the dollar that we've been waiting for ages. That's it. And we're getting so close to it now. We just got to wait until the Fed changes direction. And the market's going to force them to. So let's get in there and let's open up the charts right here. Take a look at what's going on today. And this is amazing. But it's not really amazing. The silver price is pretty much holding pat. In fact, it's up 3 cents during this. It's a flight to safety. Investors are starting to get a little bit worried now at this point. They can feel it. Something big's coming. Yeah, something big's coming. Their precious markets, equities, are going to continue to go down the toilet until the Fed changes direction. That's what big's coming. And so right now, they're starting to buy in. I thought that, I'm not sure about this, though. I shouldn't go out on a limb say gold and silver are going to hold their during this deflation. But they are the big cheese safe haven asset in the world, especially physical metals. They are the safe haven in a storm. And look at them holding their price really good, really, considering what's going on out there right now. Let's change over and take a look at gold. Where is the change thing on my chart here? Here it is, live charts. Gold's at $17.93 right now. It's up $3.80, down $3.80, which is not very much, but it's holding its own up near 1800, and that's what we want to see. We want to see it holding its own in this environment right now, when everything else is on shaky ground. Let's take a look at crypto. Crypto's not holding its own very good. 1891. Okay, 1905. So yeah, it is holding its own somewhat. It's staying above 40,000, which is a feat, really, considering. So what does it show you? It shows you even when the markets and everything turn downwards and equities start to dump into the toilet, that they don't like to let go of their Bitcoin, and they don't like to let go of their silver and gold. They don't. Let's take a look now at the Dow Jones Industrial Average, and it's down 573 points on the day. Let me refresh the page. 578 points on the day she's down. Okay, so that's a pretty big drop. It's made up all the gains that it's made over the last number of months. It's gone. Those gains are gone. And of course, we got people out there. I guarantee you there's a horde army out there of buy the dip buyers right now that are right in there buying up. You know, on the other side of that are the smart people who are selling. And there's more sellers than there is buyers. Because I'll tell you guys what, we could see a 2 handle in front of this Dow Jones Industrial Market before the Fed relents. We could see, instead of a 3, we could see a 2 there before long. We could lose all those thousands of points before the Fed relents. And heck, you know, they could hang in there as much as 30% down, I'm thinking. The Fed could stay pat because they're awfully wanting right now to kill inflation. And they could sit back and just watch this thing turn down over the next 4 or 5 months, leading into summer. And they could watch the whole economy spiraling down with it and not stand there and just not do anything and just watch and let her fall. And at a certain point, though, they will panic because it wouldn't stop. Like, if they think it's going to stop at 30% and go back up, and they think it's just going to correct like that, no, it would just keep going down. It would go down like 80, 90% if they just didn't do anything and just let the whole thing purge all this malinvestment out. But the problem is when they get down 40 or 50% down, the system would freeze up. Because an awful lot of things out there are so over leveraged. Businesses, corporations, banks, that once it drops 40, 50%, they're bust. They're belly up. And of course, that would make it drop even more. The market drop even more. If it could stay open, it wouldn't stay open. They would have, the markets would close down. Everything would shut up, and credit would stop functioning within the system at that point. Because there wouldn't be enough money out there to keep the wheels greased. And there would be a credit. There wouldn't be any credit extended by anybody. And that would all cease to function. And so when that credit, interbank lending and credit completely locks up, so does your accounts at the bank. and this would generate the system would freeze, and then they'd have to unfreeze it. Well, that would be the end, definitely be the end of their tightening cycle if they had to do that. And if they let it go more than 30 or 40%, it could suddenly drop really quickly and freeze. So they are risking it. I don't think the Fed's going to let it drop that far. I think somewhere around 20 or 25%, they're going to stop it. And they're going to say, hey, you know, this is enough. We just can't do this. And when they do that, that's when you really got to own your gold, silver, and cryptos. And like I say, silver and Bitcoin are probably the 2 better ones. You know, they're going to see the biggest gains, potential gains to the upside. Why I say Bitcoin, I don't say all these other altcoins out there. I know some of these other altcoins are going to do good, but some of them are just going to vaporize into the wind, and they're just going to disappear, and you guys could really lose your money. But I don't think Bitcoin's going to. Bitcoin's the big name of the industry, and slowly but surely they've been making Bitcoin scalable. It's becoming scalable. And the potential there, because it's a big name in the industry, it's not going to go away. That's what everybody knows is Bitcoin. That's what everybody values is Bitcoin the most, if any of them. I don't care what altcoin you got. If you go out and you talk about it and you say, I got this altcoin, a lot of people go, because they're not into that altcoin you're into. Some other guy's into a different altcoin or whatever. It's a confused mess. But everybody knows Bitcoin. And everybody says, hey, that's got value. So that's the big one. Bitcoin's the big one. Anyway, we got a market that's down over 500 points today. And let's take a look at oil. Oil's down 69 cents at 78.21. Move index today. It's going along low at 74.69. Actually, there was a time when I'd say that's not low, back when it was in the 40s or whatever. But now it's 74, and I'm considering that low because it's not 90 or not 100. Anyway, take a look at bonds, and we're seeing this upward trend in these bond yields. The 10 years getting up where it's touching 80. Remember, I told you guys 1.75 was the mark when it would start to make the markets tremble. Make the market start to turn downwards after 1.75. Well, we breached it. We breached it by 1.79, not 1.75. Went up to 1.79. I think that's the end of this cycle. I think that's the end of this cycle. I think that's priced in. The first cut that the Fed's making has been fully priced in. Now, I know some of these guys out there are saying, hey, the whole thing's priced in, the whole tightening schedule, all the way to where the Fed's going. No. They've only priced in the first They've priced that in now. So I don't think it's going to go much higher. The U.S. 10 years at 1.79. I think 1.80 is it. It's about the highest it's going to go right now because they've priced in this first move. But 1 month from now, just 30 days from now, they're going to price in the next one. And that way we could see it go up to around 2%. When they price in the next one, we could see it 2% on the U.S. 10 year. They cannot withstand more than 2.25. So we're getting very precise here what we're talking about. Next month, they're going to put another 30 billion more. The Fed's going to cut 30 billion more. That's going to drive it up, the 10 year up to about 2%. And if they do one more, they'll be at 2.25, roughly, or more or less, in around that area on the 10 year. The system cannot withstand it more than 2.25 or 2.5 on the U.S. 10 year. The housing market will go pff. System can't withstand it. So they're limited. They're very limited how far they can go with this. So I don't think they're going to get fully through their whole taper. I don't think they're going to get through their taper. I don't think they're going to make it till the end of March and get down to zero. They're not going to make it that far. I think this thing's going to bust them before they get there. In fact, I'll be very specific. I think it's going to bust them on the next cut of 30 billion. Let's move on to the last thing of the day, which is the dollar index at 96.01. And it's slowly going up today. So that's where we are, guys. We haven't got much longer to go before the Fed changes direction. And this is why you do not want to bet against this market. Is because when the Fed changes direction, you'll get caught with your pants down if you're betting against this market. And that's going to happen so suddenly when it happens. And this is not going to really be a very big deal in history if the Fed will change directions quickly. But if they hang in there, then this will become a big deal in history. The longer the Fed hangs in before they change directions. And if they really hang in there too long and they don't, excuse me, if they don't change direction too long, they hang in there too long, what'll happen is this will be a something that they talk about 100 years from now as the Greater Depression. So they got their choice. It's all up to the central bank now at this point. When will they change direction? Will they stay in the direction they're on now and cause a catastrophe? And it would be a catastrophe. Or will they change direction and cause a catastrophe into inflation? Either way, a catastrophe's coming, and it's going to affect you in your pocketbook. If it's a depression and the system deflates, the people are going to get hit. If it inflates in the opposite direction and the system, then the people are going to get hit. But it's going to take a little bit longer. It's going to be a little bit slower. The deflation would be quicker. Either way, this game ends the same way. No matter which way they turn, this game ends the same way. If it's inflation, it'll probably end in about 2 years from now. Somewhere 2, maybe 3 years from now. So we got a bit more time. If it's deflation, it could end before spring's over. If it's deflation. But either way, it ends the same way. It pinches the people tighter and tighter until they can't feed themselves. And I can't pronounce the name of that country over there. It's Kazakhstan or something like that, where the Russians right now are having to come in there and they're having to quell the civil unrest. Picture that worldwide. That's what can happen if the people around the whole world get squeezed too hard. And this is a worldwide phenomenon because it's all got to do with all the fiat currencies. They're all going down together. And so ultimately what it points toward is a period of turmoil. If it's inflation, probably about the period of turmoil, probably about 2 or 3 years from now. It's a couple years out. We got a bit of time before the currencies hyperinflate their way until the point where people are starving. But either way, we're going to get squeezed. The people are the ones that are going to get squeezed. They're going to get squeezed and squeezed and squeezed until they go ouch. Until they feel it to the point where they go ouch. And going ouch means civil unrest. And we're not talking about just one little country or something. We're talking about the whole world here. So deflation, this whole thing could boil down to that this summer, if they want to continue to let it deflate and deflate until the whole system completely purges out, which would basically wouldn't be any money left. What we basically got is a problem with the money itself. But money is what drives everything. It's the blood of the system. If you looked at a person and you say, well, he looks perfectly healthy. And the doctor says, no, he's not a perfectly healthy man. He's got a blood disease. He's got some very bad form of leukemia or whatever, right? But he looks perfectly healthy. That's the way with the system right now. The money is the lifeblood of the system, and it's got a problem like leukemia. It's like a cancerous leukemia. And so the doctor knows. He says that perfectly healthy looking man 6 months from now, he's going to be not a healthy looking man because he's got this blood disease. Well, that's the way I am with the system right now. You're looking at a system that's not healthy, and it's going to get a lot worse because it's got this problem with the money itself that they cannot correct because this is so rooted into the system. Basically, how it's rooted into the system is the money is already worthless. It's only gains function by decree. And nobody trusts the government anymore. So how can they hold that decree over the money? See, in order for the money to be trusted, the government has to be trusted. You tell me who out there trusts the government? I can't find a person out there that trusts them anymore. We got a big problem, Houston. Houston, we got a problem. That ain't going to go away. It's going to get worse and worse until it leads to a sudden resolving of the problem at some point, maybe a year or two down the line. But what's it going to look like? It's why we prepare. That's why I'm telling you guys, you got to prepare for this. What does that mean? It means that you got to prepare mentally, spiritually. You got to get friends, and you got to have your food, you got to have water, you got to have everything you need for basic necessities of life. You got to have financial preparations too, which means gold, silver, cryptocurrencies. There's a lot of things you got to do in order to protect yourself right now, because this system, and that's why people don't trust the government anymore, is because this system's out to eat you alive. And whose fault is it? It's these bureaucrats who got us into this mess, There's no stability for us or our children in this system anymore, and it's all their fault. They're responsible. Look at how they've managed this COVID crisis. For an illustration of how they've managed the financial system. Do you know the root of the word politician? I've heard this. I don't know for absolutely certain it's true, but I've heard that the root of the word for politician is the word idiot. That's what I've heard, anyway. Anyway, thank you guys for listening to my show. Don't trust the idiots, and we will catch you guys in the very next episode. Bye-bye.